real estate IRA is one way people can invest money and own real estate as part of their retirement plan. In this video, we walk you through how to invest using a real estate IRA and why it might be the right choice for you. Hey everyone, it's Alyssa here from Bay Property Management Group. Before we get started, be sure to subscribe and hit that notification bell so you never miss out on exclusive content. With that said, let's jump into today's video. So let's begin with the obvious question. What is a real estate IRA? An individual retirement account, or IRA, is a savings account with tax advantages that individuals can use to save and invest money long term. Each type of IRA has different rules regarding taxation, eligibility, and withdrawals. When you invest in real estate using an IRA, there are several considerations. First off, it must be a self-directed IRA, which is independent of any brokerage, bank, or investment company. However, if you purchase real estate using an IRA, you'll still need an entity specializing in self-directed accounts to manage the transaction, paperwork, and financial information. Additionally, it's important to note that you and your IRA are two separate entities. Essentially, your IRA owns the property, you don't. Furthermore, your property can't be a vacation home, office, or secondary residence, and you can't purchase it from a disqualified person. A disqualified person would include your spouse, family members, service providers of your IRA, or any entity that owns more than 50% of the property. Finally, you cannot sell, exchange, or lease property you already own to your IRA. These transactions are prohibited. Next, let's go over how an IRA works. It's hard to get a mortgage to purchase property within an IRA. That said, you'll likely have to pay cash, which can affect the rate of return later on. Additionally, IRA account holders need to have enough money in their self-directed IRA to cover taxes, insurance, utilities, repairs, and other expenses. For instance, if your investment property needs a new roof, you can't fix it yourself. Instead, you have to pay for a contractor with your IRA funds. In addition, since you don't technically own the property, you don't get the tax benefits that come along with other types of investment properties. And since you paid cash to obtain the property, there are no mortgage payments to deduct during tax time. If your investment is in a rental property, you also don't get to collect the rental income. Instead, the money gets reinvested into your IRA. However, when you eventually withdraw the money at retirement, you'll also get the rental profits. Now, you may be asking yourself, why invest in a real estate IRA? With so many rules to this investment method, it's often hard to see the benefits. Well, there are several reasons why people like this type of investment. Tax benefits. Even though real estate IRAs are not eligible for the common deductions other investors take advantage of, there are still great tax benefits to be had. Diversification. Real estate IRAs are a great way to diversify your retirement portfolio. Real estate has historically appreciated over time, which is great since an IRA is a long-term investment plan. You can buy rentals. It also helps that you can buy rental properties with your IRA, meaning you can earn a steady income from rents. That said, your income from your properties grows tax-free within your IRA. And it's a great way to build secure wealth. Finally, when you invest in real estate with an IRA, you can buy, sell, flip, and accumulate as many properties as you want. Buying properties to sell, rent, or flip is a great way to secure an excellent retirement fund. Despite the upsides, every investment has potential disadvantages to consider. For example, you need a self-directed IRA. One potential downside is that investors need to set up a self-directed IRA with a custodian, which is a company or financial institution that can provide guidance on IRS requirements. That isn't necessarily a clear disadvantage, but you can't buy real estate without one, which costs money. Inability to claim deductions. Next, you can't claim deductions for things you typically would if you owned real estate. For instance, you can't claim property taxes, mortgage interest, depreciation, and other property-related expenses. Restricted spending. All the expenses for your real estate must be paid for with your IRA funds, and you can't do repairs or renovations yourself. Instead, you have to pay someone to complete them for you, like a management company or contractor. And finally, even more restrictions. Finally, you can't live in the investment property, and it's also off limits to your spouse and relatives. Purchasing real estate with a self-directed IRA isn't for everyone. Keep in mind that although your investment is tax-free before retirement, if you don't follow the rules of investing, you could disqualify the IRA and create a taxable event. Additionally, if you withdraw money before retirement, you'll likely have to pay income taxes plus a penalty. However, in some instances, you may be able to avoid the 10% penalty if the money is used for college, a first home purchase, medical expenses, health insurance, or disability. Although investing in real estate with an IRA can be a viable retirement plan, Some investors prefer buying properties outside a retirement account. Investing outside an IRA gives you more flexibility and freedom with your properties. Whether you invest within your IRA or outside a retirement account, real estate is a great way to earn profits and solidify a large retirement fund. However, it's best to work alongside professionals to help you get the most from your investments. Make sure to do your research on IRAs and real estate and seek help when necessary. For more advice on a variety of other issues important to the rental industry, subscribe to the Bay Property Management Group channel, and don't forget to hit the notification bell so you never miss out on exclusive content. Also, be sure to check out our blog via the link in the description below for more investor tips, along with everything from home maintenance to financing your first income property purchase. If you like this video, please give it a thumbs up or leave a comment down below. Thanks for watching, and we will see you in the next video.